So, what do you need to know about this bill? HR 133. Well, it was signed late December, the 21st of December. And unusually, it passed both the House and the Senate on the same day. Now, there was a lot of wrangling and politicking, before that, but it did pass on the same day. Owners are just starting to hear more about it, and there's still a lot of uncertainty about what it is and how to apply it. So, in this bill that was just signed, just like the bill before it, what it did was enhance many of the programs that we were already utilizing on our clients' behalf. And it increased many of the payouts to business owners. For instance, those who are hiring people or those who have retained employees during this COVID pandemic, there are programs available for them, like PPP was available for them to get money for hiring and retaining employees and such through the pandemic. The bill included things that hopefully you're seeing flash at the bottom of your screen. Some of these were not permanent. They were year to year. They would sign them year to year. They always signed them, but they made them permanent. They increased the payouts on a lot of programs as well, and they were made in conjunction with something else. Uh, is it confusing and complex? Yes, but rest assured, we're here to uncomplicate and execute on your behalf. So I want to focus on these three. Putting the spotlight first on tax extenders. Now, this one is for new employees or new candidates that are coming on board. So this first tax credit is I call it WOTC. It stands for Work Opportunity Tax Credits. And I'll just give you the quick of it. So the federal government is incentivizing businesses to hire what they refer to as disadvantaged categories. Now, they've been doing this for decades. Some of these disadvantaged categories are, and the first one that was actually put into this was a veteran. So this actually started back at the end of World War II, and it incentivized employers to hire veterans. Anyway, they quickly added those who had served time, and for years it stood as the Veterans and Ex-Felons Tax Credit. And over the past decade, especially over the last 5 or 10 years, they've added lots of other categories. Things like someone coming off of long-term unemployment. A larger percentage of our population fits into that category now. Maybe it's where they live. They call them empowerment zones. It could be anyone that lives with them that's on some sort of government assistance like SNAP, some youth work program. So just depending on the type of positions you have, you may have some turnover. You may have some people coming through. And with our system, what you can do is we create a portal for you to help you capture these tax credits. It's more about job creation now than it is about just helping some of these categories. All employers are a great fit for these hiring tax incentives, and there's actually over $1 billion in credits claimed each year. My question is, wouldn't you like some of that?